This panel is dedicated to the report on the development of the digital financial assets. You know, this report has been disclosed recently, and we wanted to have an open discussion, I suppose, about the most important points which have been reflected in this report. In the very beginning, traditionally, I would like to introduce the speakers, the panelists, my colleagues, in alphabetical order. Valery Vaisberg, he's the director of the analytical department of the Region Investment Company.
Maxim Grigoriev,
General Director, the FinTech Association.
Denis Dodon,
Dodon, Director for Innovations in Alfa Bank.
Artem Zheleznov,
Managing Director for Strategy and International Presence for the Moscow Exchange. Denis, Iordanidi, General Director of Lighthouse Company. Yuri Maslov, General Director, the Otkritie Investment Company. Sergey Popov, Director, Transactional Division Business in Sber. Sergey Ryabov, the Business Development Director, Masterchain Company, the distributed ledger systems. And a well-known speaker to you already, Ekaterina Frolovicheva, the General Director of Atomyze company. So we've got quite a broad panel, because as it turned out, the digital asset topic applies to a whole number of industries, to a number of financial market segments, and I would say that practically everyone is represented, so I hope that the debate is going to be productive. Before we issued our report, we decided to take a look at the international regulatory experiences to understand the way our colleagues and partners who are friendly and not so friendly regulate their digital financial assets. Whereas it's more or less clear with crypto world, some are really making things tough, others are saying you should receive license as a virtual service vendor and work with it. With digital assets, everything turned out to be more complicated. So we decided to take a look whether there are such digital assets both in the Russian regulatory environment, and we're a little bit surprised to see that, in fact, we are very unique. And so we and a couple of three neighboring countries which follow the path of creating a special regulation to suit digital assets. A number of mature jurisdictions are eschewing a much lighter tolerant attitude towards the emerging digital assets, and sorry for the parley, trying to really squeeze them into the rubber cubicle of various traditional depository things. So we decided to go our own way, and so we will see whose solution is more effective, more proper. To my mind, we have made sufficiently correct decision, because creating new regulation, we haven't yet been able to impose on it the kind of requirements that have been existing towards traditional financial instruments, and that creates a certain regulatory opportunity to start to create the financial digital assets. But if you have had time to look into the report that we have published, you may find there a certain key thing that we are emphasizing, which is regulatory arbitration. So in the further regulation, we suggest that we should act on the premise that no matter what kind of instruments these are, assets, digital or not digital, if they have risks in them, they must be regulated following the same set of principles and utilize the same kind of regulatory approaches. But alongside with that, we're definitely aware that we must provide opportunity and incentives to have the new technology developing. And so this regulatory overhang that we have been living in the traditional financial market should not deter the emergence of new technologies. So we need to identify a balance between regulation, the investor right protection, financial stability, and the development of new technologies. So the first question that I would like to start out this discussion with is specifically specifically about introducing the principle of the uniform sort of risks and regulations, or eliminating this ununiform arbitration. So my question is, what is the way that the information system operators, the one who started issuing first digital assets, what is the way you look at it? Are you not afraid that if regulators would tighten up the belt and would curb your opportunity to develop the business? So what do you think of it? And on the other hand, I would like to listen to what the traditional financial market representatives are thinking. What are you thinking about it? Why? Because in this case, if we are introducing regulation following the similar principles, without doubt, we would be harmonizing approaches, and somewhere we may toughen up regulation as applied to digital assets, but that would undermine you in terms of your competitiveness. And maybe conversely, you would say that regulation should be stopped in as far as traditional financial instruments are concerned. So there's a good startup issue for a good debate. And so I would ask Ekaterina to be the first one to speak, because you are the speaker today, who I think have passed through 2 or 3 panels, so you should support us as well. Yeah, thank you, Kirill. Of course, the question is quite, I should say, not straightforward, because regulatory arbitration sounds good when at least you have a comparable mass in the market where you can make an informed conclusion that it is absolutely applicable. The kind of issues which so far have taken place since the first licensed players appeared, and the fact that Atomyze would provide the platforming opportunities, were following the ideology and in our issue decisions, which was duly reflected in the phrasing in which we're trying not to copycat the existing instruments in the market. So to say that here one may find an absolutely mirror-like fashion in terms of the tool set and the need to apply to them the same set of procedures is, or I would say, premature, because there's no mass accumulated so far, and our example does point to there being various distinctive elements. Second thing, what I see as a problem is what is not sufficient right now to be able to say that digital exists in a very liberal way, and overly liberal conditions have been allowed for it. So because following the same kind of paradigm of requirements like is being followed by other non-financial institutions, and so very high standards are being imposed upon us, and the need to reach up to the very high bar in terms of issuer access. So to me, there seems to be the possibility of applying the principle of equalizing or harmonizing approaches when generating or accumulating certain statistics of real issues, when you can come up with well-weighted guidelines as to the way the tool applied should use in terms of the structure, the existing set of opportunities, and the investors and customers as well. So do you believe that the market will learn to self-regulate and will master the ability to manage such risks without waiting until the appearance of the standards which would be cast in stone? Well, first of all, the high level of culture that we're trying to translate to our issues, and here we shall repeat the idea that previously has been voiced here at the forum. To us, any issue represents a comprehensive look, whereby we are trying to assess a very detailed set of factors, and so we're not being negligent in terms of the risk control practices. Our approach in being able to assess all of the scenarios is an absolute mandate before something comes out. So I shall admit honestly that hardly likely anybody would gain access into the system or into the issued personal account without going through a very tough selection process. Well, possibly I should say this kind of approach by us is not as fully developed, because if you say it's going to be self-regulated, well, no. I mean, simply, issues come and we present to it very directly the level of our expectations, which is not lower than what you find in a conventional market. So this is the fact which you can use as an evidence of sorts and refer to this particular case. Ekaterina, thank you very much. The very same question I will direct to Denis. Denis, what's your take on this? Good evening. Well, we are really talking a lot about the digital assets market, the financial assets market, and there it's positive. And I would like to note one interesting thing. Reminiscing about 2020, when the Russian parliament passed the law about the digital financial assets, and during the very same time, the so-called DLT Act was passed in Switzerland, which also legitimized distributed ledgers in as far as the securities issue was concerned. So in Switzerland, they entertain a very straightforward approach. They have equalized the digital financial actors to securities in terms of regulation and all the approach. But at the same time, you should know, whereas in our case, we're having a closed information system whereby you cannot really send this token to a receiver. On the contrary, they have an open information system and you can transfer these tokens on. So the reason I'm saying it is that we have a presence in Switzerland along some of the parallel business, and we were doing some research with the banks and spoke practically to all of the Swiss banks, starting from the Gazprom Bank, which has a presence in Switzerland, all the way to UBS and Credit Suisse. So what I can tell you is that when a Swiss regulator decided to follow the journey of equalizing digital financial assets to securities, Switzerland, considering the fact that the cryptocurrency turnover is fully legalized as well as the DFA, they were not able to find application to these DFAs. So in this way, they had just one issue and they tokenized wine. I mean, I can really give you substantive information because I'm fully familiar with it. So what I assume is that a very big advantage in the current legislation of ours is that the Bank of Russia, many thanks to it, not making DFA and securities equal. And today, DFA, in terms of the regulatory approach, have not been made equal to securities market. And so it seems to me this is one of the basic fundamental advantages in our law. And if we eliminate this advantage by calling it harmonizing or a uniform approach, then myself as the market player who was the first one to issue DFAs on June 1st, and many other players are trying to develop this market, not only us, I can imagine only that the DFA market is not going to exist any longer. I can also imagine that the biggest exchanges in this country are going to be rejoicing that is actually going to be the case. And because of it, there's no secret that Lighthouse is the partner to Transmarsh Holdings. So through the case of one of the biggest corporates, all of the present here know that in the securities market, a repeat issue of bonds runs up to 30 days, and rating agencies and the whole mass of spending and new deals and whatnot. So it does not mean at all that what we're saying is that let us issue bonds in the DFA form and shape. And here I agree with Ekaterina when she's saying that in her work and we in our work are trying to avoid copycatting the currently existing instruments, and we believe that that should not be done. For example, we are very deeply involved in tokenizing gold together with the UGMK. So responding to a question, yes, we believe that harmonizing legislation and making regulation equal to the securities would really be detrimental. So my position and my look at it is very clear. And so with this in mind, recently there was a research done and polling was made over quite a number of companies where 300 companies representing big and small, medium-sized businesses were surveyed, and today we see real figures. The first one in terms of the Russian local analytics was that more than 1/3 of companies are ready to issue DFAs. But I suppose if we run the same kind of survey where we would say that DFA equals securities, that won't reach neither the Moscow or the St. Petersburg exchanges. And instead of 33, there's going to be just 3% of those interested. So that is our attitude. But nevertheless, it seems to me that making it equal with the securities and the regulation along the same kind of principle is not the same thing. But that makes a very good discussion. And I believe that as part of all of our working groups, we're definitely going to pick it up further. But I would like now to direct this very same question to representatives of a conventional financial structure, Artem Zheleznov. Artem, so for many years you have been working a lot with traditional markets, and you can see the way the regulation is evolving, how various instruments are being allowed into it, what kind of information is being disclosed to investors. Now, do we need to set up the same kind of environment in the digital financial assets market? And if not, then why not? Thank you very much for your question, Kirill. I suppose that I may surprise some of those present here because I feel that the colleagues are expecting me to say that, yes, we would need to eliminate regulatory arbitration. That is really a bad thing. We should have everybody follow the same kind of rules. That no, there shouldn't be any regulatory competition with the centralized institution. But let me try and begin from a different angle. It seems to me as well that one should eliminate a certain discrimination of DFA in the first place as far as the properties are concerned, which regulatorily not have been solved comparing to the securities, in order for that market to really take off and start rolling out. Because if we talk about some sort of arbitrage, that is not in favor of DFA. The Bank of Russia has been writing about in its report in a very detailed way. It's an excellent report, and I would further later on refer to it by so regulatory arbitrage. And as far as securities are concerned, generally speaking, I really dislike this word, regulatory arbitrage, because that is a direct copying from English. In Russian, it doesn't portray a very good connotation. It means that arbitrage, speculation, means some kind of people who are not who are ill intentions are not legal. So I believe the digitalization of the assets, where you find similar economic sense. So this principle of similar risk, similar regulation is an important principle to follow. I shall repeat it again. I won't hesitate to say it again. The rules of the stock market have been written by regulators, through the blood of investors, with the blood of investors. So it's not accidental that these rules are like that. It's not because exchanges are such dinosaurs or the regulators are thinking so poorly about the marketplace, and that means decades of lost money, and fairly lost money. And so here the concept of a single risk profile and uniform regulation is a very healthy approach. And so in this sense, certainly one, in terms of the DFA that Denis is saying, one shouldn't regulate it as a bond, because it's about different risk profiles and different instruments in terms of its essentials. And to regulate it like a blue chip stock would be too excessive, particularly in as far as investor access is concerned. But what I would really keep is the rules of listing that you have for respective issues, and that is something that the central bank report says, and the rules for the investor protection, particularly the mass retail investors who are not capable of adequately assessing the risk of investing into DFA or whatever. So the last thing that I wanted to mention about it, it seems to me that the fact that we have a separate legislation that is being regulated as a separate subject creates great opportunities because within the DFA regulation, you won't have a blanket kind of regulation of approaches like in USA or in Europe when SEC regulates the respective assets, but when such a regulation is going to be fine-tuned to suit respective digital financial assets. So I would say that may entail a reason in as far as certain outdated things to be further fine-tuned in a conventional market. So we see great advantages in developing the DFA market also as self-learning experience. Well, thank you very much. And I would like to seamlessly move towards a different aspect of this regulatory arbitrage, and that is the instruments with the same content should enjoy similar kind of opportunities, tax-wise, as well as being acquired into the portfolios and balances of the institutional investors and mutual funds. And so my question to the following next speakers, Denis, Dodon, and Valery Vaisberg, could you please comment on whether the institutionals, because you represent the securities market players, Denis, you represent a lending institution, are such major players ready to invest into such instruments? And B, if positive, are there any regulatory issues or problems that prevent you from investing into such instruments? And Valery, and I would also ask you to answer the same kind of questions. Colleagues, good evening. I think we shall begin by hearing this discussion. There is a clear understanding that two markets are trying to emulate each other. Part of the conventional market tries to pretend that it is DFA market, relying upon the conventional market experience tries to emulate it. So there is bound to be a synergy sometime down the road. Speaking about the conventional market through the lens of the quality investors and institutional specifically, here there are many questions and answers, a fair valuation of assets, how you should do that, how you should reflect it on your balance, what out of it can be packed or not, really know how much there is demand from investors towards such assets. There are two pieces to it. First of all, investors don't fully understand it. This is first. And second, if investors don't understand it fully, then this is not about marketing or selling, because by investors I mean retail investors and skilled, qualified investors and institutional investors that are going to go into it. Mutual funds, insurance companies, and management companies that know it. Well, first of all, the policy for accounting on the balance hasn't been defined completely because they don't know how to account it, they don't understand how to do that. Secondly, not completely clear, the story related to the depositories, because if we say that certain kind of assets are going to be marketed that require depository houses participation, you need to understand how that should be deposited. Should there be any segregation of assets at the level of tokens and at the level of accounting practices, how you should do that? There are certain limitations and issues that are still in the regulatory field. But I would say that the question here in the first place is what you should look at through the eyes of investors. It's not really about regulatory arbitrage. It's more about investors not being able to completely understand all of the advantages of a digital financial asset. Because, amongst other things, there is no practical experience. In order to understand the advantages, you need to try and buy it. But buying it, they cannot, because there's a whole mass of unresolved issues from the point of view of accounting on the balance, the fair value, and certain other related things. There's nothing to buy yet. There's nothing to buy yet. What you should say is that we're trying to regulate something that is not existent on the one hand, because on the one hand we have a certain limited number of issues and they are quite segmented in terms of distribution. There's no mass product out there. Any product you can evaluate it in terms of interesting, not interesting, only if it's in the mass segment, and gradually only then the qual investors are going to be emerging. So there are certain limitations also in terms of how quality investors, as institutionals, are going to find it and assess it, fair value of assets approach. The issuers are going to issue them. They can issue themselves as well as act as investors themselves. How are they going to pack it? So the whole question is, so far they're looking at it through the lens of the conventional market and conventional regulation. They are restricted by certain things that you find in the conventional market, and so far there is no easing whereby you can say that you can go towards that asset with a bigger leverage of risk than in the traditional market. I guess that's the way. Thank you very much, Ekaterina. You wanted to say something? Yes, I also wanted to support. So, in the meantime, this lack of understanding comes from the fact that the issues were very specific in terms of the recipients. They were being aimed towards a limited circle of investors. Such investors would take on certain risk, would set the risk limitations, and those were the attempts to create the kind of a practical experience from which you could derive conclusions. The kind of conclusion, I can give you an example. In one of the placements that was happening in the Atomyze platform, one of the systemic banks for itself was writing down the methodology about how they should reflect it in their accounting. How are they to evaluate it? And that is, indeed, in the meantime, the kind of story where you create something from scratch, and that is a big deterrence because you cannot copy it from anywhere. You need to honestly admit that it really would be great if you can show me the page from which I can copy it all. No, there isn't any. And everyone approaches it with reservation. This is first. Second, something that we have empirically come to. For example, various settlements for the DFA transactions, because we're not a bank, we don't have the capacity to service accounts. Our settlements would take place, like on the cards. Somebody would confirm me that payment took place. All right, but this is the risk that I have to accept. But for the mass nature of it, this nominal account as an instrument would somehow enable one to safeguard the transactional costs. That is the key for us to see the turnover, how the deals are being closed, rather than just 3 transactions within 1 week. That's not enough. Yeah, thank you, Valery. Yeah, everybody, happy Friday. I guess that I would come at it through the experience of our foreign counterparts. Look, the countries which for a long time were having low inflation and where crypto industries was developing much more actively and different mechanisms would appear, like exchange transactional funds, were not so strongly interested in crypto assets. They simply went into it because, in my mind, the problems, principally, there are 2 of them. First one is we need to understand if we are offering something to our institutional customers, what kind of value that asset is delivering. One of the values is simply asynchronous fluctuations, negative correlation to traditional stock, basically answering your question whether one should create digital assets which would look like traditional ones. No, I guess not, because what sense would it make to buy them? Because you need assets with digital negative correlation which can hedge risks and fluctuations. Second important point is where we until now have seen that for many years the biggest assets in crypto are Bitcoin, then Ether, and you have to create such size of an asset which will be very liquid. So speaking at the bond market, the 300, 400, 500 million is the size of the placement, and basically individuals buy it. So the difference is not only in profitability, in yield, in size as well. Institutionals buy up the kind of placements which are worth billions. 3, 4, 5 billion, that's the benchmark size that principally could be of interest. Therefore, my vision is this: if it is possible, principally, to create a certain the funds for the funds of funds, where you would place different digital assets, list them in the exchange, because I shall remind you that the pension funds can only buy and sell at the exchange funds outside of an exchange. They are prohibited to. If you can create such kind of funds which would ensure sufficient size, clear value in terms of negative correlation to the conventional assets, I suppose this story may take off. And towards the very end, I shall say that I suppose there is a bit of an area where digital assets may help the conventional instruments. That means to try and relaunch improving the liquidity of the mutual funds, which emerged some 15, 20 years ago. then it kind of became quiet. So you may try and recuperate it as well. Again, then you can try and relaunch the money market. For example, if we end up having mass tokens, which will be digitalizing the receivables, and that receivables, let's say, would be monthly, bi-monthly, 3 months long, and you can create big money market funds, that could be an interesting asset liquidity management instruments for the banks as well. Valery, thank you very much. You have gradually brought us towards another topic that we have been discussing as part of our report, the one that we previously touched upon today and yesterday, and that was digital financial asset liquidity. I mean, the extent to which they could and should be transacted within an organized platform. And here I would like to try and listen to a broad number of panelists, and that is about the extent to which, indeed, the operators of the digital system can live without exchanges. Should it be part of the organized trading? If so, following which model? Let me remind you that within our working group, when we were preparing the report, we were discussing two models. On the one hand, they have things in common. On the other hand, they have principal differences. Now, whether a digital asset in the form of a digital entitlement can be traded through the exchange, or should it be some sort of a digital certificate similar to the way the digital rights have? I mean, it's like a derivative of DFA. So in what form they can live and trade through the organized trading platform. And generally, speaking, how businesses and exchanges and the information operators systems are going to align themselves. Should it be a partnership or a competition? Because we're currently going through a very interesting development phase, and depending on the kind of decision, regulatory decision we identify, would define the future of this market. So let me begin from Sergey Popov. Please, Sergey. Right, yeah, good evening, everyone, once again. Well, it's not a straightforward issue. You're absolutely correct, and that is why in the report there are just two ways. And essentially, we're all talking about the DFA law already, prescribing such in essence as the exchange operator, and that was adopted specifically for the placement operators to be able to interact with themselves. Now, do we need them? Yes, of course we need them, because today we already have 3 platforms. The number of platforms may increase further, and of course customers may wish to sell, exchange, trade their tokens not only as part of the information system within which were issued, but also at other platforms. And to reject customers here is something that we definitely shouldn't do. This could only be done by providing for certain integrations and bridges between different systems. And in my mind, specifically the exchange operators can become this essence. But at the same time, speaking about exchanges, they always have had organized trading processes. Well, similarly, what is the difference? But the difference, I guess, here is that, like previously mentioned, that we are creating a brand new legislation without trying to put the old clothing upon the body of the new instrument. That is why I'm sure that the exchanges are going to get actively involved, and the willingness on their part to work with the digital assets is quite understandable. And in this case, the operators, I suppose, must not prevent this from happening. Again, in view of the issues that I mentioned, there is a heated debate taking place about the licenses. Should all licenses be granted automatically or not? I suppose that in this case, automation would not be the right thing to go about it, because truly there are different mechanisms, and the placement operators have gone through quite a long journey together with the central bank, and we do see the kind of underwater reefs that had to be navigated, and the exchanges need to understand entering into this market. Understand the kind of requirements they would need to comply with. Well, maybe the placement operator, or give it a different name in exchange. In my mind, this is the kind of issue that will be subject to regulation later on. By the fact that such bridges that should be built for such operators is something that I have no doubt about. Now, going back to various schematic arrangement, a lot is currently we hear being spoken about DFI. If we talk about decentralized architecture, to me, as a person who is involved in developing a placement operator, the information system operator, I would very much like the principle of digitalization to be present. And I get is the kind of interesting option that I can see is when an exchange would place on its information system the smart contracts, which would work like in a decentralized system, so that such transactions could happen. We currently see that there are DX exchanges, decentralized exchanges, and I suppose that if exchanges want to actively participate in working with digital financial assets, they also need to think about decentralized architecture and, for example, place their smart contracts with the placement operators. And I believe that is going to be a very elegant, smart decision that can satisfy all the parties. Thank you very much. An interesting look. Actually, we haven't even thought about it, but why not? All right, Denis. Sergey, exchange operator, should it be a player who has a distributed ledger or not? An exchange operator? Well, again, we haven't yet created a single exchange operator in this country, but speaking about the kind of model that I described, when an exchange operator is going to place smart contracts with placement operators, so essentially that, yes, he or she is going to be a participant of a distributed ledger. Now, will he have his own in his architecture? We'll need to think about it. I believe that we have said it, that within the next 2 or 3 quarters we'll see this architecture. To me, it is important for the exchange operator to interact with the placement operator rather than the other way around. Yeah, thank you. Thank you.
Да, пожалуйста. Вы что думаете на этот счет? Вот все-таки биржа вам...
Dennis, what do you think about it? Do you need an exchange, or will you directly integrate with the brokerage houses? Because brokers have customers, not the exchanges. Well, you know, Kirill, you mentioned a very important second point, so let me begin with it. You said you raised the question whether there is a competition, and can there be potentially competition between the big reputable exchanges with a lot of liquidity to them, a lot of customers to them, and small, modest organizations like Lighthouse, behind which you find some big corporates. Let me tell you this way. Yes, we indeed do see that exchanges view us as competitors, and we would like to say it's wrong. They make a mistake. Why? Because effectively all of the 3 currently existing information systems effectively propose a new way to go to brokerages and exchanges, a new financial instrument. So I would phrase this question not about any potential competition a priori, because these players have been nurturing their infrastructure for decades, the customer capacity and so on and so forth. On the contrary, what I believe, and that's what we're saying whenever we talk to brokers, that first of all, we don't have any competition whatsoever, and secondly, we are providing you with an opportunity to create a new section within your infrastructure, DFA, new instruments which create new opportunities for everyone. And so with this in mind, we believe that the collaboration with the biggest exchanges and brokers is exclusively about partnership rather than fighting against each other. So as far as the DFA placement is concerned, in our view, the fundamental problem in the development of the DFA market today is liquidity and the possibility for investors and access for investors to such an asset, which is placed out in any of the 3, and I hope in many more future information systems. Today, what we see is that households, because of regulatory restrictions, cannot use government services, and they're identifying the government services so as to seamlessly board themselves into one of the 3 information system. But at the same time, we know that in crowdfunding, it is possible. So this is a hindrance. This is an obstacle. The second obstacle is the limitations in advertising and promotional activities that you find in the law. Why am I saying it? actually, this is not critical. What I mean here is that we believe that the kind of liquidity that is necessary for the market to develop is what you find amongst brokers. And so we believe that it is very important to try and integrate as fast as possible the information system and brokers to open up access towards digital financial assets and to the conventional infrastructure. And we should start with the brokerages where you have customer demand, liquidity, and so on and so forth. And so with this regard, there are two models to follow. The first one is off-exchange work where you don't have this comparative. And we very hope that until the end of the year, the current year, it will be possible to institute transactions in the outside of the exchange OTC mode, which will create to raise liquidity and enable households and retail customers and the corporate customers of brokers to invest into DFA. So in our work, we see this priority being the topmost one. As far as the exchanges are concerned, undoubtedly, we are interacting with them openly. We believe that to be honest, we don't understand why is it that they want to gain the status of the information system operators. I can't find an answer to it, not because of the competitive consideration, but because to them, we are just a section. We provide new instrument to them, which they need to place out, rather than try and on their own to propose to the market to issue certain instruments of a different nature within the distributed ledger system. Thank you, Denis. A logical next question, it would be for me to direct to Ekaterina. Ekaterina, could you do it briefly? Because I think you several times mentioned that you're ready to work with the exchanges and brokers, but nevertheless, what would you prefer? Interacting with an intermediary or with two intermediaries, if we talk about an exchange-based model? Well, I will try and fit myself into the previously stated phrases. The elegance of DFA is that you have this inexhaustible, programmable factor, because automation of the life cycle of an instrument creates this attraction to a certain extent. So to me, what I see is something that we're working hard over. This is integration into the already existing owners of considerable investor pools and an ability to utilize the full user interface and the full functionality of working with an account or a purse that you can use to acquire DFA with it, keep it there, post it to sale, or hold it to maturity. As far as the ability for the DFA to trade through an exchange, as I'm saying, the elegance of DFA within the programmable terms that it has, quite possibly, I'm confusing myself technologically, so let the technological team correct me if I'm wrong, but nevertheless, to support the whole set of its programmability is to transfer it into the distributed ledger. So if we talk about the exchange operator and the trading function is what I would like to see within an exchange as an opportunity to preserve and support the whole of the functionality that the smart contract may give us to turn our DFA into an exclusively a certain downgraded instrument like a certificate that really won't work well for a well-distributed rationale. This is possible. That may work when a certificate is going to perform in a nice way. But if DFA, in terms of the business logic, could be in an automated way reflected in a number of transactional events, then we definitely need to have a distributed ledger as an environment within which it's going to exist. Now, does the exchange need the distributed ledger? particularly since the distributed ledger, as we know, are not very fast things in terms of the productivity, and so that poses also a good question. Well, I mean, we can apply this CUP in a centralized way and come up with certain more elegant approaches. This is not big news because at the crypto exchange they're also using centralized stacks, but nevertheless to find an elegant solution, something that is possible, do an exchange in order for the smart contracts to be there, or in order to have liquidity and fully organized tradings with a high level of clicks. Well, I mean, these are issues in different areas. Do you need to have something or to use it? Listen, the market is voting with its feet, so the issues are going to vote in the same way with its feet. Where I'm going to have more liquidity, that's where I'm going. Now, the whole question is what is going to be the cost of such an instrument and whether it will remain attractive, because TCO is something that nobody yet prohibited. To produce a smart contract, I mean, there aren't any ready-made arrangements. Sergey won't let me tell a lie. Depositories or repositories of the smart contracts that you can place out within 5 minutes. I mean, we don't have an abundance, although this is something that we definitely wish to have. All right, Sergey, just be brief about it. Yeah, very briefly. From conventional instruments, amongst them, we see and have an interest towards DFA, and so exchanges can be automatic market makers. Actually, this can be done. Indeed, the most important thing is to look at it from a different angle, and that was when all the interest is going to dovetail. All right, thank you. It would be logical to ask brokers what brokers think about it. So DFA and operators, is it something that you need, or principally speaking, your customers are quite content with the kind of instruments that they have, but maybe you should expect DFA to come up to some sort of a level first. Yuri? Can we project a slide onto the screen here? Well, look, let me just begin. I will split into two parts. Nobody can see? No. All right, I will comment. All right, yeah, we'll have it. That's great. Super. Now, what the DFA market needs brokers for? Quite obvious. We own customers. We have a lot of them. We have identified them all, and we're ready to give them the instruments. We will do integration, and we'll be able to give them to them right away. And that will be just a certain product, as far as we're concerned. Yes, we definitely need DFAs, because that will enable us to broaden the spectrum of instruments, because the factoring receivables is the most fashionable thing right now. Short-term bonds that Valery referred to, the 2-month long ones, that is what we need right now, and that is necessary for the market to develop further. Because what do customers really need in order to grow used to DFAs? I mean, what the market requires, there has to be a habit. Customers have habitual infrastructure, habitual applications, habitual people who are talking to them. Let's simply put additional instruments into that, and the customers will grow used to it as well. And so in this sense, it would be strange to assume, when we are having a whole industry emerging, would it be correct to grow a second pool of advisors, second pool of whatever? But I would like to underscore yet another idea, which to me really deserves to be reflected in the report, but I haven't had it mentioned. Brokers to brokers. I mean, DFA needs brokers, but do the brokers need DFAs? Because we talk about DFA as a technology, that would be distributed ledger. Now, what problem do brokers currently face? Infrastructure shocks, plummeting marginal capacity. That means fixed costs, and our fixed costs means accounting. So maybe we should let brokers to maintain accounts within the distributed ledgers, while the second node will be in the central bank, and we would immediately end up having real reporting. We will immediately end up having, how shall I put it, a big simplicity in infrastructure, because myself as a broker, I'm keen to talk about DFA as a product, but at the same time, I'm aware that there are 500 coal miners under my hood producing energy. And so that's what I mean, that it has to be holistic. You mean that not only DFA should be put into the distributed ledger, but also accounting for the traditional instruments? Absolutely so. We can begin with DFA, because obviously this is a new area. We'll take a look at it, we'll try what is going to be productivity, but further on, that should be mainstreamed. Well, I believe this thinking is very much non-trivial, and my colleagues out of DFA operators, we were having a debate about installing these nodes on the part of regulators, so that regulators, without asking for reports, could see online the risks and see what is happening. Maybe we'll be able to advance ourselves in this. Maybe indeed this idea have a lot of common sense, because we have this experimental legal regimes, and we may think about such an experiment. Yes, we would be ready to provide you with infrastructure for such an experiment. Thank you very much. No, all right, let me say as well that we are ready. Everyone is ready, all of the platform operators. And the very same question to Valery. Valery, how do you see the possibility to interact with the DFA operators and your place as a broker? Well, in DFA, what's appealing to me is that we really can cut this vicious circle and step away from it, either one for all or all for one, in terms of the attitude. And so in this sense, it seems to me that a broker, it can really strengthen his role and become not only the liquidity provider, but also the kind of a tool that would ensure the market with information efficiency, providing customers access to OTC, to one exchange node, to a different one, to one information system, to a different information system. So principally speaking, we can truly earn not only from transactions, but also information services vending. And as far as the speed is concerned, indeed, there is a question about it, but it seems to me, although again, we might be kind of criticized for referring to conventional thing. For example, just a company, there is a registrar. Registrar is like a blockchain, but works very slowly. Apart from the registrar, there is a depository who works faster, and there's an exchange also. So what's going to be interesting to deal with by building this hierarchical system, and I think that we had a discussion about it, and so in terms of certification, not in terms of DFA, but the certificates for it, the derivatives, what may happen is that the speed of the turnover of such derivatives will equal the speed of entering into DFA transactions, and then you can high frequency trading can also institute, which may produce very good marginal products. And so because exchanges would have computational skills in order to process a great number of transactions, brokers have also a lot of opportunities to receive and process customer orders. So it seems to me that we should really thinking about what I've started out by saying, how should we develop a relationship between everybody, everyone with everyone, to step away from the hierarchical structure. Certain nodes, certain concentration systems, they would emerge because you would need to concentrate, for example, about one type of an asset. Then we have nodes which would concentrate information about a different kind of an asset, certain settlement systems. And so I would say that we, the brokers here, would find it much more habitual, because we have grown used to follow our customer and try and find for our customers the best possible solution, the best possible ways to close customer deals, to offer continuously new instruments, continuously find ways to establish relations with such instrument vendors and other exchanges. That's where I see the future. Thank you very much, Super. I believe that everybody has got inspired. Now let's go over to the tokenization of new instruments. The DFA regulation, and I suppose the utility digital rights, is very flexible. Like we've discussed yesterday, you can pack quite a broad line of business cases into the digital assets. Certain things we've been able to see as part of the trial placements where the DFAs are linked to the precious metals. What are other business cases that are currently on your agenda? What else are you considering as a possibility to tokenize so that in the DFA form one may launch new instruments wherein you may not possibly have the same kind of the regulatory arbitrage so as to put onto it something in terms of the regulatory burden? So let's talk about this. Denis Dodon, please. Well, speaking about hybrids, there was about a certain idea when we were sitting here and thinking, there was one project when we were trying to put everything upon a microservice infrastructure, and we ended up having a monolith. I was very surprised that that was possible, because when you put a lot of business logic into the microservice infrastructure, you can end up having a monolith. From a microservice, you produce a monolithic infrastructure which is not moving anywhere. The reason I'm saying it, well, it's important for us to avoid coming to the same end of DFA, when on the one hand we are creating an environment, on the other hand there is a lot of regulations that really pushes everything into the dead end. And here I would like to talk about the hybrid instruments. When we talk about the DFA, it's going to be a good story so as to allow for the information system operators to issue utility tokens, because that would create turnover. You can issue, you can store, and simultaneously you can settle using it. And in fact, everything that applies to something you don't find in the tokenism is liquidity. That's what makes the non-conventional market from the digital one, because when you have digitalized certain instrument, when you have digitalized the rights for that instrument, no matter what kind of an asset we're talking about, to make it liquid, that is what is going to be interesting. That is something that we have been discussing within our working groups. And so the possibility to combine under the federal law number 251 with the 52nd one, the requirements placed upon the information system operators are very stringent, and that makes it possible to do it at the regulatory and technology level, and there is quite a good penetration. So you suggest that two federal laws number 251 should be merged into a single one. You know, when I read through the central bank report, I felt that really that's what it is all going for. And in terms of the business practices, that is very close to becoming possible. Because whenever we talk about what kind of instruments in the areas of the digital financial assets are going to appear, yes, digital financial assets are making it possible to raise different ways of funding. You issue token, you assign a certain yield to it, and you get funding. But the issue how to get funding and how to make a certain illiquid thing into a liquid one through turning it over, that is exactly something that would make the market move. I mean, not conventional instruments like stocks and bonds. That's what it all starts with. That's normal because we are copying certain practices from the traditional market. But the possibility to issue liquidity into something that is not liquid by putting it into the digital form by way of not only digital rights but also certain rights to dispose of a certain asset that makes it possible to really liquefy it quickly. Yesterday during one of the panel, Artem gave a very proper definition of liquidity in terms of the textbooks to quickly market, to quickly dispose of a certain asset without the loss of its value. So when you combine digital signature with the possibility to move money, providing investors with liquidity through quickly buying or selling it without losing value, that would create the push. If you take a look at the business cases that we are taking a look at and that the current operators are observing, most of them, in my mind, out of what I see, it's really in the area of yes, there are digital assets. There are great products with the exchange traded metals, the receivables, but in the area of tokenization, I don't know, diamonds, gold, real estate, you name it. It's all in the area of tokenization of a certain material assets primarily, which may end up having greater tradability. And so combining these two essential things will create great push for the market. Okay, the same question to Sergey. Yes, I shall begin that it has really touched upon it, but the Masterchain platform currently issues 2,000 transactions a second. That's more than the mirror system did over the past year. So one shouldn't really feel sad. We've got a fast-acting system, and we'll be able to process everything. As far as tokenization is concerned, I shall support Denis in terms of the hybrid DFA. Indeed, if we are to combine the essences of the DFA and I really enjoy the case of the commodity exchange like in St. Petersburg, where you can buy products in a railway load, but you cannot buy it in sort of a small wholesale thing. And so it seems that this particular case is currently being covered by individual companies, but it hasn't been resolved structurally. Another case that we have tokenized real estate, and so it seems that it is moving that way. But there is a very strict limitation that it is impossible to tokenize something that is subject to government registration. And maybe you should take a more look at it, or look for some sort of models in that. The last case that I wanted to mention is securitization. Securitization of credit portfolios, securitization of factoring portfolios. And moreover, I was talking today to the Association of Investment Platform with regard to the federal number 259, and they also require securitization of the portfolios that they own. And so this particular case is indeed very interesting to bring liquidity or to release the limitations in as far as the currently existing financial instruments are concerned. Sergey, thank you very much. And Yuri Maslovs, do you have something to add on top of what your colleagues previously said? Yes, thank you very much. I would like to add more about the approach, because we were talking about a regulatory arbitrage, but in fact, if we adhere to the kind of approach where we issue only new instruments in DFA that previously we haven't had, then this problem with the regulatory arbitrage is not going to be. We end up having a sandpit within which we'll be able to really process these instruments, be they interesting to the customers or not, because everybody knows this term EVP, and everybody understands how first you really try it through your customers, and then you substitute your working man with a robot. So if you don't mix it up with the existing market, that's what I would like to underscore. Yeah, Kirill. Yeah, I would like to offer a bit of a remark. Yeah, this is about whatever we talk about it and whatever we hear our colleagues are saying, we see that the federal law number 259 from 2019, this is about investing. We're talking about investing. We're not talking about a specific entitlement to a product or a service, because in the first place, of course, we need to tokenize warehouse stocks. And so 2019 federal law number 259, this is the digital password, but one time. But this is not what we need to really look into. Well, thank you very much. I'm sure that we will definitely forward all of the available ideas, particularly since we have this great working group that you're all members of. Well, I suggest that we should move on. Well, dear colleagues, we've got another very non-trivial issue, which is foreign digital assets in Russia being traded. We also referred to it in our report. We made the first attempts a year ago to look into it. And so the question to the information system operators, let's start with Denis. Denis, are there any foreign-produced DFAs which you believe could be considered by way of possible instruments for trading in the form of digital assets within Russian regulation through your platforms, or is it too early to look towards them and let's think about something different? Well, you know, Let's first sort it out with the Russian DFAs, and when we'll think about foreign ones. We had a big debate about the federal number 259. I would like to agree with Sergey because we have hybrid digital rights which make it possible for us to do everything. The law has been written in the right way. Colleagues, why should we talk about Law 259 from 2019 when we have hybrid digital rights? It would seem more correct to say to eliminate VAT and to allow for these digital hybrid rights to be traded. And so, again, I would agree with Sergey in terms of their essence. They're totally different. One law about investments and the law about DFA. I wouldn't confuse it. As far as foreign DFAs are concerned, it would seem that we have a closed information system, something that I started out with, and it will remain the same, and it will have indirectly as a correlation, but now the question whether the foreign companies would be eager to register within the Russian infrastructure to place these here, and whether the foreign DFAs it would be possible to have them here. So, as of right now, I don't feel this question is so important until the VAT on the hybrid digital rights is resolved ultimately. Well, thank you very much, honestly. Maybe I didn't understand 100% how VAT and foreign DFAs are related, but I do agree 100% that the taxation issue is much more important than discussing the access for foreign financial instruments here. Maybe some of you think differently. Ekaterina? Well, I guess I shall begin by saying that it really would be great to at least begin to allow non-resident entities to buy the DFAs which are traded within the Russian infrastructure. I mean, the ones that do not have any representation or legal entity subsidiary. Secondly, I would definitely say that from the point of view of Atomyze company development, we see good future in having joint architecturally systems existing in different geographies which support the placement and trading of digital assets, as well as allow in Russia here upon the existing infrastructure to serve as the support for the DFA and translate that into the systems that can be duplicated in friendly jurisdiction where you can find a similar kind of an architecture like in the case of the Atomyze. And we're not talking about this public sort of a blockchain system. And thirdly is something that currently being actively considered as a hypothesis, and that is that the DFA and the cross-border cooperation could become one of the new ways in order to find an answer to the question about whether one would be able to find the resolution to the question whether they should be listed here or should be listed there. We simply see it as a transportation, as a vehicle to bring it into some sort of foreign economic activity, which alongside the way runs up against a certain secondary issue that they would be required for the hard currency control, certification, regulatory things. So I would really look at it in a very practical way. First of all, we need to make it possible for the foreigners to buy the DFAs issued here and then bring the foreign systems in line with what we're having here. Well, thank you very much. I think I should offer a bit of a comment, if I may. Yes, Denis, go ahead, please. Essentially, we shall support Carter here full swing, because what we're saying is how one should buy foreign assets here. First of all, it's hard to understand what kind of assets, what we're talking about, crypto, non-crypto, when we are saying buying an asset. Here, the story is related to, on the contrary, to bring capital here by marketing assets that have been issued locally. And so one should say that the story here is, first of all, we're continuously saying that we should make it possible to make it fly so that a certain foreign investor would come. And so the rules for onboarding and for an investor in terms of the QIC principles should be more simplified in terms of how we're going to onboard investors and how we're going to implement. And so the question of having these assets go into the international market in some form or way, into the current jurisdictions where you may offer something to these foreign investors. And so these caveats related to the possibility of issuing it in hard currency are the key ones. So what we're saying is that to buy somebody else's assets is what we're talking about, how we should market our own assets, what we are not really talking about. So we should optimize it in ways of issuing it in hard currencies to be able to propose it in a foreign market. Well, I think that you are right. The development of regulation should really follow the needs of the markets and its future. And so in this sense, if there are certain business cases that fell out of our attention as part of our report, quite possibly you are right, and we should do that. But in a natural way, as I said, we're open to any dialogue. Now I'd like to go over to the next topic. Today, this is the topic that have been mentioned previously, and that is about the regulation of smart contracts. It is quite a debatable thing. On the one hand, why? Because, again, like the DFA, there aren't too many smart contracts out there. Some are saying that maybe we shouldn't really go for it. We shouldn't really think about it in terms of how to regulate it. What for? On the other hand, maybe one should start from the reverse. First, one should create transparent and clear environment so that the smart contracts not only should appear, but so that future consumers should trust it, so that they could understand the way how the compensation for damages may happen if all of a sudden smart contract doesn't produce the kind of an outcome that originally was claimed, whether the smart contract terms should be transparent and easy to understand, not only for those who have produced it, that not only for the software developer who can read it, but also, sorry to say, non-qualified investors. So the question is, again, very non-trivial, and I would like to direct it to Maxim Grigoriev. Maxim, in terms of what you think, to what extent smart contracts one should regulate, maybe not regulate, maybe the market should produce a certain standard, and IFT really could pick up the medley. And if there is a need for it, what kind of aspects do you believe should be considered as the key ones to produce such a standard? Thank you for your question. I think I should commend the report that was published because it has already structured this question in a certain way. The most important aspects have been defined, and that is the possibility to interpret the contract one way or another, then the issue of liability, then disclosure of the contract terms, at least so that it is easy to understand which way your mind should work and go. There is another statement that was made during the plenary session that in the current conditions it is impossible to be in the way for growth in terms of tightening the belt and making things tougher. And so these phenomena like DFA and smart contracts is something new, and we don't have enough experience, and that there may be a need to make things strict before everything flows out into the open sea. But I believe that we also need to follow the general consumer properties, and through that towards DFA and public networks, where trust towards smart contracts by design comes from many of those who are looking towards these smart contracts. So in terms of quality, we would like to reach to that level of reliability and trust. And so in terms of the way we should move towards, in the meantime, these systems that are based upon the distributed ledger, they're quite simple, and there may not be too many problems. And so this process is something that you definitely should monitor while the information system operators are accountable for it. And to the extent I understand, the smart contracts are part of such information systems. And so the accountability is, in the meantime, quite clear. Now, when the trading will start become more complicated, now does the exchange operator has a certain chain, and now there will emerge certain aspects of interaction between these chains, and so it would not be easy to define accountability. And so by observing this market in its further evolution, we must try and define the aspect that will require standards. And to the extent I remember, the way it was written in your report, the basic things will need to be standardized because that is an aspect of the information security administration and control over the smart contracts. I can possibly also expect that it would require to create standards of smart contracts like in our real life. We have certain types of contracts, we define their format as not requiring standards. A very proper question was raised, which resonates with the kind of an issue that we discussed yesterday when we were talking about open interfaces. There is another aspect, i.e. that there should be certain guideline standards that would help the developers of the smart contracts to do things quicker. So basically, the market will create it, self-regulation will create it. And there's another aspect that Dmitry Zars today has mentioned, repositories and publications. It seems to me that the topic is a great one. You shouldn't do something like that. Maybe we should also think about some kind of additional markets and services which would be established around it, like an audit service. Again, this is not going to be about the classical auditors or notaries. Again, something distributed, maybe some sort of a network, which is going to be set up based upon the proof of stake principles. Someone will validate the smart contracts if this kind of a smart contract requires validation or a regulation requires the auditing of such smart contracts. And basically speaking, and by the way, recently I saw a piece of news when one of the companies, I think, raised $20 million US specifically for the audit services. There is such a new KYT, know your transaction, and so they are trying to develop such services. So quite possibly some sort of a business shall emerge, some sort of a market for this, and the same token for the explainability and transparency for smart contracts. All right, thank you very much, Maxim. The same question to you, Ekaterina. Smart contracts, it seems to me that is your favorite one. Yes, I have my whole team seated out there, yeah, the developers, they're writing everything down. No. I wanted to say that it's not that we are being actively pushing it, but we've got very specific examples of how to simplify the developers' lives, because smart contract and its life cycle, to a certain extent, this is an application, and you may discern it and categorize it into very typical rubber stamp operations and transactions under which you have a set of measures that are all being written using the typical programming language. And so the set of combinations that is being utilized here is quite a feasible technological task. We also have now an example of a smart contract constructor where we are trying to really unify, for example, investors in instruments which are linked to the precious metals value, the kind of the life cycle elements that the DFA goes through. And that is all about how one can improve it further. Secondly, so as to verify correctness for the DFA execution, this is a comprehensive task for me. You have FinTech and there's a legal tech, because there is a set of issues which are reflected in the prospectus, and then you move it all into a programmable language, then executes it. And so this kind of a combination is not exclusively for the developers. This is a comprehensive one, because whatever is written in the decision to place, the prospectus, economic and legal part of it, should be correctly reflected in the program code that is being executed in the network. So I'm looking at it not only as integration exercise, not least important as an aspect. Underneath all of it is this infamous cybersecurity, because any program code that is not going to be brought by an outside developer, this is a risk. This is a security breach prospectus. I know I really like the kind of article which is unlimited liability of the operator of the information system in terms of the correctness of data, in terms of the legitimacy of the way the system operates. So any unverified code which all of a sudden is going to be executed in the system poses a risk to me. And if there was no Article 9, would you easily allow outside developers in? No, we would still be applying the code, because if you learn through some sort of a previous experience, and here I have already mentioned it, that having worked for some time in the IT company, there are certain practices, independent software vendors, the one who bring in further sort of improvements. So in any case, practical access for an external code into my systems and quality insurance, audit of quality of it all as a phenomenon, definitely that is part of the implementation. So you can be an outside developer, but the risk assessment and quality is still on your side. Yeah, right. So first, Sergey, but then Denis, you will have the word. Of course, if we are to talk about smart contracts and decentralization, we've been talking about something that have been done right now on our platform. Of course, this is not about decentralization of a smart contract. We do it ourselves as an operator. And as Ekaterina put it, every new type of a DFA is a new smart contract, and so quite clearly customers would like it. I'm calling it ribbons. So operators won't be able to produce all this written, so clearly it has to be presented in this form of a easily understandable smart contracts. We don't have this functionality in our platform, so we're thinking about making one. Yes, we are, because decentralization is where we would like to really create the kind of infrastructure that we believe is the most useful. But in our working group, we're trying to discuss who should be accountable for it, and would very much like the law to have this thing written in it, but to an issuer, certainly a smart contract can be written by vendors who develop it, but in this case, the accountability must be on the issuer's side. If the issuer have brought into the platform his own smart contract, of course it would pass through a certain validation, but what's written inside it is going to be vendor's liability, and that must be written in the law. But the platform will act as an arbitrator, would conduct a certain expert valuation against the fact that the smart contract, as indeed was brought by an issuer, rather than a different smart contract was used that an operator put in. Yes, Denis, please. Well, first of all, I would like to thank for the fact that the Bank of Russia raised this issue in its report, because it really bears a lot of importance. Why? Because it's all about investors' trust towards information system and an instrumented question. This is a fundamental question, because smart contract actually entails the whole of the rationale of the work that is being done for the DFA to be traded. Now, speaking today about whether it is subject to regulation or should not be subject, I suggest that we should look at the international best practices, because if we take a look in not a single country of the world, we will see the regulation of smart contracts. But how they deal with it, and they indeed deal with it, they deal with it through two ways. The first one, compulsory audit of a smart contract. Any organization, and I can run a simile in crypto world, smart contract is being audited. For example, in Switzerland, it's being done by PwC. And that is a very costly thing, lengthy, time-wise. But any company there that is thinking about going for the digital currency IPO must go through it. Yes, and I agree, yes, and there is a requirement, not to the operator of the information system, but rather a requirement to have an audit. And so with this in mind, it sounds very logical to have such a requirement in place. But that brings about a whole set of other issues. Do we have an organization in Russia which has sufficient qualification to run such an audit? That is a whole big separate issue. Well, I mean, you might scare everybody off and nobody would like to go for a smart contract. No, it's not about scaring everybody off. I want to save smart contracts from being regulated. It's just trying to say that the whole problem can be resolved through auditing. Now, the second way is publishing such a smart contract so that any individual, be it an investor or an IT expert, so that they could see and look and understand what's in the code of a smart contract. And so, with this in mind, the regulation of a more public work indeed seems to be more important. And so Article 9, which put the whole liability upon the information system operator, is the proper one, correct one. I mean, you can understand the Bank of Russia through the risk hedging practices that we should be made liable for everything as information system operator. But overall, we hope that in the future that would not be the case. There would be a different approach. But as far as the smart contract is concerned, the investors in the current models don't have any smart contracts, right? So the smart contracts works inside an information system in the current period of time. So investors don't come with their smart contracts. They may come with some sort of a business model. But in any case, smart contract lives and exists in the information system. And it is important when speaking about an audit, we shouldn't raise any heavy requirements upon information security, because information security, it is rather about the operational resilience rather than the smart contract itself. Well, thank you very much, dear colleagues. I mean, so in an unnoticed way, 1.5 hours have flown by. Any questions from the room? Well, I guess, dear colleagues, are you not tired? Maybe we should answer a couple of questions. One. All right. Yes, over there. Can we have a microphone brought here? Thank you very much. A question to the regulator, actually. Federal Law number 259 envisages two roles in the operator of information system and exchange operator. But considering today's debate, when you mentioned the last king of the exchange and the role of the brokers and some sort of another agent, it seems that nobody understands completely what sense does it make to split the market into these roles. What was sense in it? What was the ultimate idea? And secondly, if there is any common sense in it, wouldn't regulator like to prohibit one entity or a group of affiliated entities to enact these two roles? Well, thank you very much for this question. This is a highly debatable one. I would answer to a second question saying, no, in the meantime, we don't want this to happen. Let's take a look at it, as they're saying. Let's take a look at the way the market is going to develop, and then we will adjust certain things. But quite possibly the exchange operator will be necessary in order to build bridges with different blockchains and between different information system operators. I'm not saying that I hold the ultimate truth. No, let's take a look at the way the business practices evolve. And there's another question. Could you introduce yourself, please? Thank you very much, Fyodor Chilikov, Sberbank. I cannot but ask you a question. We are closely monitoring the practices. If you may recall, there was a pilot placement by Megaphone and Raiffeisen commercial bonds on a blockchain smart contract. We did an analysis, and the subtle thing there was that there was a smart contract, but transacting it through the depository accounts was done manually. I mean, they simply read it out to us and then transacted it through. So the question is to the exchange operator and to Sergey, the existing contracts, do they go into the innards of the back office, and do they do the forceful account transacting, or they still do it through the gates? Well, let me think about it. Effectively, we need to understand that if there is an issue being done through the Sberbank platform of a third party and there is an investor, so you need to understand that reflecting it on the accounting balance of Sberbank in such a case is not happening. And so the back office of Sberbank in this particular case is the place that nobody has to go into. But currently we have the system of oracles which are communicating with the blockchain, and that certainly was not done manually. But as I was saying, that we are trying to do everything in a proper decentralization, and the blockchain communicates with the back office through the oracles. Well, I can tell you that the payment transactions in our part is where the smart contracts reads the events in terms of the transfer of funds, and that is exactly what I was mentioning when I was saying that the nominal account makes it possible to really come out with mass kind of transactions and real-time settlements. And when the DFA is transferred, money changes hands, and that is registered as an event, and that is calculated in the smart contracts. So what I'm saying is that the payment rationale follows hand in hand with the rationale that transfers from an account to an account, the DFA from an address to an address. So if now, if you are making it a broader question whether the accounting system reflects it, I mean that you need to do some sort of an integration. So it's a question about the banking unbundling and the way the DFA activities exist within all the systems which are supposed to register activities. So in our case, we provide issues and investors the reports which they can then integrate into their reporting systems. Well, I mean, as the exchange representative, just one word, if I may, because on top of what our colleagues mentioned, so that you don't have an impression that depository really, whatever they are saying is wishful thinking. Of course, it was a pilot project, and one must understand that everything was done in a test technology against the then current, it was in 2019, the project was done in 2018. So everything was done within a traditional infrastructure in order to fully comply with the legislation and technological testing of a smart contract on top of that placement. Well, thank you very much, dear colleagues. Thanks, everybody, for the questions, to our speakers. Great many thanks for their participation. I'm sure that despite the fact that with regard to a number of issues we have different views, that's all right, because we have a debate, and debate will help us identify the truth, and we'll prepare all the necessary proposals to change regulation. We'll introduce these amendments, and DFA will take off high. And I wish to everybody in this market to be successful, for DFAs to be liquid and grow. So great many thanks to everybody. Have a good evening.